What is up, YouTube? We are back again for the second official episode of my channel, Life with Dan. I'm excited to go into this one today. We got a lot of cool stuff to go over. If it's my first time meeting you, welcome to the channel and I'm thankful to have you here. And if you're back after having seen that intro video I put out, welcome and it's great to see you again. Now, the original plan for this video was to make one long 4-part video that basically gave you guys an entire overview of what my stock market world is like as of today. I was going to show you guys what stocks I'm in, what app I use, what I've learned in the stock market, and what I'm currently watching as far as like what I hope to buy. And I quickly realized that was an overly optimistic goal for one single video. So what I've decided to do to make things simple and to make it less of a hassle for myself as far as workflow, I'm going to separate this one video into 4. So call it like a little mini series on stocks with Dan. So we'll do the first video today, which is obviously, as you can see, going to be about what stocks I currently hold in my portfolio as of today. I'm recording this video on August 6th before market even closes, so expect the information as far as like the stock prices and all that to be a little bit different by the time this video has reached you, because obviously it took me a few days to edit this video and get it all put together. So with all of that said, we'll go ahead and move right into the revealing of my portfolio. And by the way, if while you're watching this video, I mention a stock that you also hold, not only do I want you to smash that thumbs up button, but leave a comment and let me know. Tell me what your cost basis is, see if it's better than mine. So the first company that we'll be going into for my portfolio is the Boeing company. That's ticker symbol BA. If you've never heard of them before, they're the leading U.S. manufacturer of commercial airliners, so they make all the big planes that we used to fly around in. When you think of the commercial airliner business globally, there's really 2 companies that hold most of the market share, and that's going to be Boeing in the United States and Airbus, which is the European manufacturer of commercial airliners. I've got Boeing's profile pulled up on Yahoo Finance here so we can go over some of the other things that they're involved in. It reads here, the company operates through 4 segments: commercial airplanes, defense, space and security, global services, and Boeing Capital. So not only is Boeing a company that's making airplanes for airliners so that consumers like you and I can fly in them, but they're also making aircrafts and weapons for the military. They're involved in information and logistics, so many other things. I mean, this is a huge company. As you guys can see here, as of about 10:30 a.m. on August 6th, Boeing trades at about $171.5. But what I wanted to point out actually was the market cap size at $96.81 billion. So just under $100 billion market cap for Boeing. So I wanted to just show you guys to give you an idea of how big the company is. This is a company that's actually surrounded by a lot of controversy, and the main reason for that is because of 2 fatal crashes that happened. One happened late 2018 and the other happened March 2019. What happened was 2 of their 737 MAX planes, one of their allegedly best models, one of their highest selling models, one of their most commercial models, ended up crashing, taking the lives of a total of 346 people. That number is according to Business Insider. So 2 terrible accidents with the same model plane. And what ended up happening after that second crash was Boeing was forced to ground the 737 entirely. There are no 737 MAX jets out in circulation right now until the company is able to fix all of the engine problems, technological problems, any issues that were found with the plane. They are currently going through a lot of recertification processes and getting everything done that they can to bring that plane back to market. Actually, just recently in June, as you can see in this article here, they were able to do their first recertification flight of the 737 MAX. As you guys can see here, as of August 6th, I currently hold 9.4 shares of Boeing, and that adds up to a market value of about $1,614. My average cost is at $160.23, so that puts me up some 7.15% or so. But I am holding Boeing for more of a long-term / dividend play, more on the former with the long-term play, so I'm not really concerned with a 7% gain or a 7% loss. I am holding the stock for where I think it's going to be 2 or 3 years down the road. Moving on to the next stock in my portfolio, we've got Workhorse Group. That's ticker symbol WKHS. If you've never heard of them before, I've got their profile pulled up here. They are based out of Loveland, Ohio, and what they do is design, manufacture, build, sell, and lease battery electric vehicles and aircraft in the United States. So basically, the company makes and sells all-electric cargo trucks and vans, as well as delivery drones. One interesting thing to note about this company is that they are one of, I believe, 4 companies currently in a bid to win a contract with the United States Postal Service. This contract is worth about $6 billion, and they could potentially win all or part of it in this bid. And if they do, Workhorse is a company that has put itself in a much more sophisticated and revenue-generating position. The stock currently trades just under $17 at $16.70 some cents. And my position is 45 shares at the moment for a market value adding up to $755 and change. My average cost right now on Workhorse is sitting at $15.36. So as you guys can see, I'm up 9.3% or so on that stock. And to kind of show you guys a comparison to Boeing, the market cap here with Workhorse is sitting at $1.75 billion. So definitely a much younger and smaller company. To give you guys an idea, this is more of a spec play in comparison to such a big industrial company like Boeing. Contract aside, I still have to look at the company more and see how good of a company it is and determine for myself whether I see potential in the long run for this company. If the stock is one that I determine will potentially be a $60 stock in a few years, why not hold it until then? Because that is a great return on your investment, currently at $15 and change. So definitely a spec play, but an interesting one, and one that fits into a market that is inevitably coming, the all-electric vehicle market. So, definitely one that's worth looking into if you haven't already. Workhorse Group, check it out. Moving on to the third company that we're going to look at in my portfolio, we've got the Verizon company, or properly Verizon Communications. That's ticker symbol VZ. Now, most of us know what Verizon is and what that company does. I don't want to go into it too much, but basically, if you haven't heard of them before, they're an American multinational telecommunications conglomerate, and they're a big part of the Dow Jones Industrial Average. They provide telephone communication services, internet and wireless services to both consumers and businesses. As you guys can see, as of August 6, around 10:40 a.m., Verizon currently trades at $57.80. It's been on a bit of an up week actually, and as you guys can see here, I have just recently started my position, so I'm barely holding 10 shares of Verizon for a total market value of about $578. My average cost is sitting at $53.64, so I'm already up on Verizon, just under 8%. But the main reason why I even started investing in Verizon to begin with is not so much to expect any kind of long-term growth or anything like that. I mean, Verizon is a pretty mature company, but mainly why I got into it is to participate in the dividends, because speaking from experience, right now it just seems like it's hard to find a decent interest-bearing savings account. So what I'm trying to do is move into dividend stocks like Verizon, put my money into stocks that are reliable, safe companies that have been constantly paying out their dividends, that have been steadily growing or at least steadily maintaining their position in the market. As long as interest rates are low on savings accounts, I am continuing to put money into stocks and things like that, kind of treating dividend-bearing stocks as my savings accounts. Moving on to the fourth stock in my portfolio, we're going to look at Pinterest. That's ticker symbol PINS, or PINS, and fun fact, that's actually the first stock that I ever invested in. But anyway, Pinterest is kind of like a visual search engine, if you will. People kind of call it like an inspirational platform in the sense that you can find all kinds of different posts and images that kind of help you be more creative. But the cool thing is that amongst this inspiration, all these posts and whatnot, you can find direct links to products. So like if someone is looking at inspiration on how to decorate their room, they can see direct links to some of these products that are being used as inspiration, so that if they want to buy it, they can go straight to it and get it. So it's a really dope platform. And let's go ahead and look over Yahoo Finance's description of the platform, just so we can kind of get a better idea of what they are. It says here, Pinterest provides visual discovery engine in the United States and internationally The company's engine allows people to find inspiration for their lives, including recipes, home and style ideas, travel destinations, and others. It shows them visual recommendations based on their interests and taste. As you guys can see here, as of August 6, around 11:15 a.m., Pinterest is trading just under $36 a share, and I currently hold about 40 shares at a market value of $1,437. My average cost sits at $20.46, which puts me up a whopping 75.5%. Pretty great return after they recently reported earnings, which made the stock jump quite a bit. I think it was up some 30% in one day. But anyways, it's been a great ride with the stock. I've actually held it for over a year and a half now. Like I said, it was the first stock that I invested in. And, being that I've held it for that long, it actually has taught me a lot just in that one stock. I mean, I've seen that stock be up as high as it is now, be as low as the mid-teens, and stay right flat in the middle in the 20s. So it's been a stock that's done a lot. I guess it's been pretty volatile in this year and a half, but it's been a pretty volatile time. But yeah, a lot of interesting things to take from that stock as I've held it for this long. I'm still up some several $100s, so I'm happy with that, and I don't plan on letting go of my 40 just because I do believe in Pinterest. Maybe if my opportunity comes back of buying more at a lower price, I can do so because I do believe in the company long term. Alright guys, we've made it to the final stock in my portfolio that we're going to look into today, and that is going to be Simon Property Group. That's ticker symbol SPG. That's an S&P 500 company, and if you've never heard of them before, they're a REIT, which is short for Real Estate Investment Trust. Basically, what their purpose is owning and managing different types of real estate property. If we look at their home investor page, Simon Property Group has a pretty nice description of themselves there. It says, Simon is a real estate investment trust engaged in the ownership of premier shopping, dining, entertainment, and mixed-use destinations. Our properties across North America, Europe, and Asia provide community gathering places for millions of people every day and generate billions in annual sales. So what got me interested in SPG originally was, well, amongst many things, how badly the stock had gotten beaten after it was forced to shut down all of its malls due to COVID. Obviously the stock got beaten down appropriately so alongside its business. But what I see in the stock is a lot of potential for when things open up in full, for when malls are able to have people filling them up and when things go back to normal. I see a lot of upside potential for Simon Property, a company that has a very strong balance sheet and that has done very well during COVID, trying to acquire different properties, trying to strengthen its position. I actually am near one of their malls, the Ontario Mills Mall here in Southern California. So I firsthand got to see a little bit of the revamp of people going to the mall after things started opening back up. And it was very promising. I mean, people were more than ready to start being in the mall again, and it was pretty packed. I'm talking just recently, before things started to kind of re-shut down. But yeah, Simon Property Group actually has properties all over the United States and, like I mentioned in their bio, also overseas. And with how much cash they've got on hand and the acquisitions they've been doing during COVID, I just have a strong feeling that they're one of those companies that's weathering the storm, so to speak, and going to come out on the other end a much stronger company. As you guys can see here, as of August 6, around 11:30 a.m., Simon Property Group currently trades at $61.80. I currently hold 20 shares in the company, which adds up to a market value of $1,236 and some change. My average cost sits at $63.28, so I'm currently down a bit, but I'm actually totally fine with that because I am someone who is trying to build his position a lot more into this company because it pays a dividend. So it's right alongside my Verizon stock in the sense that I am also holding it for what it's going to be paying out in dividends. I've actually already gotten my first payout on this stock already, just like I already did with Verizon. Well, that just about does it, guys. We have covered the stocks that I hold in my Robinhood portfolio. If you stuck around until the end of the video, I am super thankful for you, ladies and gentlemen. I'm thankful that you take the time to check this out. And if you appreciate the transparency of the video, I would really appreciate a comment. Shoot, maybe even a like. Shoot, maybe even a subscribe. I'm going to try to be super real in all of my videos, be very transparent, and let you guys see my entire process, my growth as an entrepreneur and as a seeker of wealth. when I finally achieve all my goals, when I'm at that top, when I'm at that place where I've desired to be my whole life, you will have seen the whole climb there. You will have seen the mistakes, seen the successes, and hopefully with all that, we can channel each other's energy and, just grow together. So thanks for watching this video. The next one is hopefully a lot better. Thanks for watching Life with Dan, and we'll see you next week.